To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
So friends, we have discussed the concept of section 9 subsection 5, one of the finest section in the topic of charge of GST. Something very important for a simple fact and reason that in case of certain notified services which are supplied through e-commerce operator is liable to pay GST. And we just now discussed that in case e-commerce operator does not have physical presence in India, then their representative in India is liable to pay GST. And if there is no such representative, they must appoint a representative and make him liable. Something very interesting and important. And what are the notified services? We discussed that originally there are only 3 notified services. Number 1, services of transportation of passenger by way of radio taxi, motor cab, maxi cab or motorcycle. Number 2, services of hotel accommodation except when person supplying service is liable to be registered. Number 3, services of housekeeping except when person supplying service is liable to be registered. So these are the 3 interesting points what we have discussed already. Correct, my dear friends? Now let me discuss some very interesting amendments which have come up with effect from 1st of January 2022. We have got 2 interesting amendments, my dear friends. First amendment is pretty simple and straightforward. We discussed about the concept of transportation of passenger by way of radio taxi, motor cab, maxi cab, motorcycle. But they made a small amendment to that line where they have specified that services of transportation of passengers by way of radio taxi, motor cab, maxi cab, motorcycle, omnibus or any other motor vehicle supplied through e-commerce operator, then e-commerce operator is liable to pay GST. In simple terms, what they have done is earlier they covered only what, my dear friends? Radio taxi, motor cab, maxi cab, motorcycle. Now what they have done? Service by way of transportation of passenger by way of radio taxi, motor cab, maxi cab, motorcycle, omnibus or any other motor vehicle, whatever it is. So for example, now Shiva Teja opened an app known as Ola. I opened an Ola app. I did not book a car, I booked a bus. Earlier, this transaction was not covered under section 9.5, but now this transaction is covered under section 9.5. That means what? Let me give a small example. Shiva Teja opened the app called Ola. I opened Ola app and I booked one bus for transportation. And the bus is actually provided by Mr. A. When I do a booking of that bus, Ola will send a message to Mr. A. Mr. A will actually give service to Shiva Teja. Now who is giving service to whom? Mr. A is giving service to Shiva Teja through Ola. So service is supplied through e-commerce operator. In that case also, e-commerce operator is liable to pay GST. So the only small amendment what they have done is that earlier what was covered is radio taxi, motor cab, maxi cab, motorcycle. Now what is covered? Radio taxi, motor cab, maxi cab, motorcycle, omnibus or any other motor vehicle. If it is supplied through e-commerce operator, then e-commerce operator is liable to pay GST. So in simple terms, service of transportation of passengers by way of radio taxi, motor cab, maxi cab, motorcycle, omnibus or any other motor vehicle, then e-commerce operator is liable to pay GST. And if e-commerce operator does not have physical presence in India, their representative in India is liable to pay GST. If there is no such representative, they must appoint a representative and make him liable. So in net effect, my dear friends, there are 3 interesting points now. Number 1, service of transportation of passenger by way of radio taxi, motor cab, maxi cab, motorcycle, omnibus or any other motor vehicle. Second point is what? Services of hotel accommodation except when person supplying service is liable to be registered. Number 3, services of housekeeping except when person supplying service is liable to be registered. These are the only 3 points which are there in the law, which are actually notified under section 9.5. But let me tell you, my dear friends, with effect from 1st of January 2022, they added one 4th point into this. That fourth point is nothing but restaurant service. So let's take a classic example, my dear friends. There is one person, Mr. Ravi Teja. Ravi Teja opened one app known as Swiggy, and on the Swiggy app he ordered one plate of idli from Hotel Chutneys. So what has happened, my dear friends? Mr. Ravi Teja opened an app known as Swiggy. From Swiggy he ordered one plate of idli, my dear friends, correct? From the Hotel Chutneys. Now please tell me the answer. Who is the person who is actually preparing that food? It's actually prepared by Hotel Chutneys. And Hotel Chutneys is supplying that food items to Mr. Ravi Teja through what, my dear friends? Swiggy. This Swiggy, Zomato, all these are nothing but e-commerce operator. They are nothing but food aggregators. Whenever we place order on Swiggy and Zomato, that Swiggy delivery person or Zomato delivery person will go to the hotel, pick up that particular food items and deliver it to the customer. So restaurant is actually supplying service to the customer through Swiggy or Zomato or to any other e-commerce food delivery platform. Now what they have specified is that even in that case of restaurant service, who is liable to pay GST is the e-commerce operator only. So when Hotel Chutneys is supplying food items to the customer, that is Hotel Chutneys is supplying food items to Ravi Teja through Swiggy, who is liable to pay GST on the transaction is Swiggy is liable to pay GST. Such an interesting point. Very, very wonderful amendment which has come up with effect from 1st of January 2022. Even though actual supply is made by Chutneys only, even though it is turnover for Chutneys only, still who is liable to pay GST is Swiggy is liable to pay GST because this transaction is notified under section 9 subsection 5. But one interesting point. The restaurant service section 9 subsection 5 will apply. However, it will not apply to such restaurant or an eating joint or any kind of a cafe which is located within the specified premises. Now what is specified premises? Specified premises is a kind of an hotel which has got an accommodation where the declared tariff of an unit per day is above 7,500 per day or equivalent. So the room rent, the hotel stay, accommodation rent is more than 7,500 per day. So let's take a small example, my dear friends. There is a person known as Mr. Shiva Teja. Shiva Teja one fine day sitting at home and relaxing in the evening time wanted to have some amazing delicious food. So what I've done is I opened an app known as Zomato. Shiva Teja placed an order on Zomato. I opened Zomato app and I selected Novotel Hotel and I placed order for some food items. So what will happen now? Zomato delivery person will go to Novotel Hotel, pick up that food items and deliver it to Shiva Teja. Correct, my dear friends? In this transaction, who is liable to pay GST? The answer is pretty simple. If Novotel has got some room in that particular hotel where the room rent, that is a declared tariff, is more than 7,500 per day. In that case, who is liable to pay GST on this restaurant food transaction is Novotel. But the highest room rent in Novotel is 6,000 per day declared tariff. Assume declared tariff means before a discount. The price before a discount including all the amenities is called declared tariff. Imagine in the Novotel hotel highest room price is 6,000 per day. Then who is liable to pay GST is Zomato is liable to pay GST. But imagine in the Novotel hotel highest room rent is 10,000 per day. So is there a unit where the room tariff or declared tariff is more than 7,500 per day? Yes. In that case, who is liable to pay GST is Novotel only but not Zomato. So in simple terms, which case 9.5 will apply is restaurant service other than such restaurant or eating joint which is located within the specified premises. Specified premises is such premises where there is a accommodation where the declared tariff per unit per day is above 7,500 or equivalent. Something very interesting, my dear friends. So in simple terms, if Shiva Teja is placing order on Swiggy or Zomato from any hotel, cafe or anything like that, then what will happen? Who is liable to pay GST is Swiggy is liable to pay GST. But if I place order from such a big restaurant which is located in a hotel where the accommodation of a room declared tariff is more than 7,500 per day, highest room rent is more than 7,500 per day, then obviously who is liable to pay GST is the actual hotel but not the e-commerce operator. In this context, let me highlight some important concept, my dear friends. We all learnt about the concept of TCS, which stands for tax collected at source, which we have a separate topic and it's also there in the registration topic. That is, TCS is a case where any person is supplying goods or services through e-commerce operator and consideration is collected by e-commerce operator. For example, one person, Mr. X, is supplying some goods to a customer through Amazon. Then customer will actually make payment to Amazon. Then Amazon will pay the amount to Mr. X. When Amazon is paying to X, Amazon will do something called TCS. The story of TCS will come only when two conditions are satisfied. Number one, supply is made through e-commerce operator. Number two, consideration for that supply is collected by e-commerce operator. Then only TCS will apply. But let me tell you, my dear friends, in case of this restaurant service supplied through e-commerce operator, where e-commerce operator is liable to pay GST, then the provisions of TCS will not apply. Obviously, very logical. TCS story only will not apply because hotel is not liable to pay GST, restaurant is not liable to pay GST. Who is liable to pay GST is only the e-commerce operator. Unless that restaurant or eating joint is located within the specified premises, which is nothing but a premises where there is an accommodation of a declared tariff having more than 7,500 per day or equivalent. One very interesting special point let me discuss here. Imagine a case like this. Shiva Teja opened Swiggy app, ordered some food from a restaurant. That food is being prepared by the restaurant and restaurant is supplying that food to Shiva Teja through Swiggy. Who is liable to pay GST is nothing but Swiggy, that is e-commerce operator. And e-commerce operator, anyways, there is no need to take separate registration. For e-commerce operator who is liable to do TCS, registration is anyways mandatory. But here, in this case where e-commerce operator is liable to pay GST, they will take registration and continue that existing registration. And now since e-commerce operator, that is Swiggy, is liable to pay GST, Swiggy only will issue invoice to Shiva Teja, but not the hotel, because who is liable to pay GST is the e-commerce operator. Now let me discuss one more interesting special point in this case, my dear friends. Listen. Mr. Shiva Teja, let me take my own name. Mr. Shiva Teja opened Swiggy app, ordered some food from a restaurant. Along with that food, I also ordered some packaged item. Let's say some packed food item from that restaurant itself. So restaurant is preparing some food and giving it to me, and they're also selling one packed item. Correct, my dear friends? This story, whatever we discussed, where I told you that e-commerce operator is liable to pay GST, that is applicable only for the restaurant service. But if the restaurant is selling any packaged food, something like a mixture or any other kind of condiments or anything like that, which is not a restaurant service, or a packed sweets and anything like that, which is not a restaurant service, then who is liable to pay GST is the actual restaurant or actual hotel only, but not e-commerce operator. The story of where e-commerce operator is liable to pay GST will apply only and only for restaurant service. If restaurant supplies any other service or any other goods, then restaurant only is liable to pay GST. So it is always advised that restaurant should give separate invoice for restaurant service and for other services. So that for restaurant service, e-commerce operator is liable to pay GST, and for other service, restaurant will become liable to pay GST. Such an interesting concept, my dear friends. Very important. High probability that question will trigger in the exam. This is the beautiful concept of section 9, subsection 5. One last point which I want to highlight, which I am sure most of you would have seen practically also, that is, in case of restaurant service, the rate of GST is just 2.5% plus 2.5%. And it has been clearly given in the law that restaurants cannot take input tax credit. So that 2.5% has to be paid using electronic cash ledger only, but not credit ledger. And the same logic will apply even for e-commerce operator also. That means for the restaurant service supplied through e-commerce operator, for which e-commerce operator is liable to pay GST, the GST on such service should be paid using cash ledger only, but not credit ledger. So with respect to this concept of Rule 86A, where we discussed about the concept of disallowing debit from electronic credit ledger, that is, officer will specify that you cannot use the balance in credit ledger in any of those above circumstances. That is where credit is fraudulently availed, no invoice or goods are not received, or supplier has not paid the tax, he is not conducting business from registered place of business. In any of these circumstances, officer has got a power to disallow the debit of balance in electronic credit ledger. That means he will not allow you to use the balance in credit ledger. And let me tell you, the authorized officer or the proper officer here is the commissioner or principal commissioner. And this commissioner or principal commissioner has power to authorize the power to any other person not below the rank of assistant commissioner. So they basically give the right to any officer not below the rank of assistant commissioner based on monetary limit. In case where ITC is fraudulently availed or ITC which is ineligible is not exceeding 1 crore, then the concerned officer is assistant or deputy commissioner. And if the amount involved is more than 1 crore, does not exceed 5 crores, then the concerned officer is additional or joint commissioner. And if the amount involved is more than 5 crores, that is a credit fraudulently availed or which is not eligible is more than 5 crores, then the concerned officer is principal commissioner or commissioner. And the similar logic will apply even to the department of DGGI, that is Directorate General of GST Intelligence. Even there we have got similar hierarchy like assistant director, additional director, deputy director and all. Similar monetary limits will apply even to the directorate level of persons also. Basically they specified monetary limits so that that particular concerned officer will take care of that issue. So in simple terms, if the ITC ineligible or fraudulently availed does not exceed 1 crore, assistant or deputy commissioner. More than 1 crore does not exceed 5 crores, additional or joint commissioner. More than 5 crores, commissioner or principal commissioner. They are the concerned authorized persons to regulate the matter with respect to Rule 86A. That is disallowance of debit from electronic credit ledger. With this discussion, we completed the concept of section 55, which deals with the concept of refund to UIN holders, which is nothing but any specialized agency of UNO, multilateral financial institution or a consulate or embassy, they are granted UIN instead of GSTIN, and whatever inverse supplies they have done on that, whatever GST they paid, that they can claim it as a refund. Subject to the interesting conditions what we discussed, that is supply should be made from a registered person. Number 2, there must be a tax invoice and invoice must contain unique identification number. That is very important condition. But let me tell you, one interesting amendment has come up with retrospective effect from 1st April 2021, where they have specified that if the tax invoice does not mention the UIN, that is unique identification number, even then UIN holders can still claim refund by submitting a self-attested copy of such invoice. And that self-attestation should be done by authorized person or the authorized representative of the applicant. So the applicant who is making an application for refund, authorized person or representative of that applicant should submit a self-attested copy of that invoice in case where invoice does not contain UIN. So in simple terms, after this amendment, refund can be claimed even though invoice does not contain UIN, provided the authorized representative provided the authorized representative of the applicant submits a self-attested copy of such invoice for the purpose of making an application for a refund. And this amendment has been brought in by virtue of notification number 40 by 2021 dated 29 December 2021, and this amendment is with retrospective effect from 1st April 2021. In simple terms, even though the invoice does not contain UIN, still refund can be claimed by submitting a self-attested copy of such invoice. A small clarification has been given in this respect, my dear friends. That is, with regard to deemed export, we just discussed that the relevant date to consider the time limit would be the date when the return related to such deemed exports is furnished. Now the point is very simple. In case of deemed exports, that is, in case of supply of goods regarded as deemed export, the tax is always discharged by the supplier. So the relevant date would be considered from the date on which return related to such deemed exports is furnished by the supplier. Obviously, because the return is related to the deemed export is furnished by supplier only and tax is discharged by supplier only. So relevant date would be the date on which return related to such deemed exports is furnished by the supplier. So in simple terms, the relevant date would be date of filing of return in relation to such supplies by the supplier. That will be the relevant date in case of deemed exports. Before we close this topic, my dear friends, 2-3 latest interesting clarifications which have come up with respect to refund of balance from electronic cash ledger. We all know that credit ledger is a great amount of facility which government is giving based on inward supplies, but the cash ledger is not like that. Cash ledger is case where the taxpayer has deposited the money into the cash ledger. So with respect to this cash ledger, they have given 3 interesting clarifications. Clarification number 1, there is no time limit in case of claiming of refund from electronic cash ledger. Of course, that's very logical also, because that's your money which you have deposited from your own pocket. So how can time limits apply? So first clarification is there is no concept of time limit in case of claiming of refund of balance from electronic cash ledger. Number 2, there is no declaration or certificate which is required to prove that there is no unjust enrichment. This concept of unjust enrichment we discussed at length in detail in this topic already, that is refunds. But let me tell you, there is no declaration, no certificate required to prove that there is no unjust enrichment in case of refund from electronic cash ledger, because that is our own money. Number 3, this is very, very interesting. We all know that the TDS, TCS credits under section 51 and 52, once accepted, will reflect in electronic cash ledger but not electronic credit ledger. So they have given interesting clarification that the TDS, TCS credit which are credited in electronic cash ledger can also be claimed as a refund. So in simple terms, you can happily take refund from electronic cash ledger without any time limit, without any declaration, without any certificate. Such a wonderful, interesting clarifications they have given with respect to claiming of refund of the balance of electronic cash ledger. So friends, we are done with discussion about 2 interesting sections. Of course, third interesting section also. 73 deals with determination of demand in cases other than fraud, misstatement or suppression, and 74 deals with fraud, misstatement or suppression, and we are talking about demand related to tax not paid or short paid or ITC wrongly availed or utilized or refund claimed erroneously. Now 73-74 talks about other than frauds cases and 74 talks about fraud, misstatement and suppression. Now 75 deals with determination of demand under section 73 and 74. Now let me tell you, my dear friends, couple of interesting amendments which have come up in this interesting concept, my dear friends. And let me tell you, first one is very simple, but second one is very interesting. Now let me talk about the first interesting amendment which has come up, where they have specified that once the proceedings under section 73 or 74 are concluded, then no other further action is taken under section 122 or section 125. That means 122, 125 deals with the penalty provisions. Very logical for a simple fact and reason that penalty is already imposed under section 73 and 74. That is the reason why no separate proceeding is taken up under section 122 and 125. However, proceedings under section 129 or 130 can still be invoked. 129 deals with detention, seizure of the goods or conveyances in transit, and 130 deals with confiscation of goods. 129 deals with detention and seizure. 130 deals with confiscation in case of improper removal of goods. So those sections will still continue to apply, will still hold good even after conclusion of proceedings under section 73 or 74. So if proceedings under section 73 or 74 are completed, then no further proceeding is taken up under section 122 or 125. However, proceedings under section 129 or 130 can still be taken up. This amendment is with effect from 1st of January 2022. So from 1st of January 2022, section 129 and section 130 has been separated from section 73 and 74. So once proceedings under 73 or 74 are concluded, then all the proceedings under section 122 and 125 are deemed to be concluded, but not the proceedings under section 129 or 130. So detention, seizure or confiscation of goods will still continue to hold good even after conclusion of proceedings under section 73 or 74. Yes, one more interesting amendment, my dear friends. This is a very fantastic and one of the most practical amendments. Friends, we discussed very clearly in the returns topic that every normal registered person is required to file GSTR 1, GSTR 3B on monthly basis. I am talking about a normal registered person. GSTR 1 is what? Statement of outward supply. GSTR 3B is a monthly summary return. Now let's take an example. There is one person, Mr. Rakesh. He is a normal registered person. For the month of let's say August, he is required to file GSTR 1 by 11th of September and is required to file GSTR 3B by 20th of September. That is a general tendency of the due dates. Now, some interesting point, let me make you recollect. Sometime back, very clearly we discussed that in case of self-assessed tax, in case of what? Self-assessed tax, if it is not paid within 30 days from the due date, then the person is required to pay a penalty equal to 10% of the tax or 10,000, whichever is higher. Very clearly we discussed that penalty is 10% of tax or 10,000, whichever is higher. That's an interesting point what we discussed there. And very clearly we also discussed that in case of self-assessed dues, directly they will start recovery proceedings. Now some important point to be noted here. That is a very fantastic amendment which has come up, where they have specified that self-assessed tax shall also include the tax which has been specified in GSTR 1 but which is not specified in GSTR 3B. That is nothing but a tax which is mentioned in statement of outward supplies which is filed as per section 37, but it is not mentioned in GSTR 3B which is filed as per section 39. Now why this kind of thing is been put in the law? Let me tell you a practical concept here. Some kind of people, some segment of business registered persons, what they are trying to do is they are showing a turnover of, let's say for example 20 lakhs in GSTR 1. They are paying tax in 3B only on 10 lakhs. That means extra 10 lakhs shown in GSTR 1, for which receiver, he will see the credit in GSTR 2A and 2B and he will happily enjoy the credit. But government is not getting the revenue because that turnover is declared only in 1 but not in 3B. And we all know the fact that GST liability is paid only at the time of filing GSTR 3B. GSTR 1 can be filed even without payment of tax. So government observed that there is a loophole here where people can try to play with government by showing a higher figure in GSTR 1 as compared to GSTR 3B. So they thought that there is a risk element involved here, and they have decided that yes, we'll bring one more interesting amendment, and they brought this amendment specifying that self-assessed tax should also include the tax which is mentioned in GSTR 1 but which is not paid through GSTR 3B. A very brilliant amendment. But let's take a general tendency here. There could be some instance where some clerical mistake would have happened, or some instance where previous month 3B higher figure is shown, so in the current month 3B is shown less as compared to GSTR 1. Let's say for example, in the month of May, one figure is 15 lakhs, but in 3B we paid tax on 20 lakhs. So what will he do? Since he paid tax on 20 lakhs, next month in 3B he will show 5 lakhs less. So there could be some genuine cases, there could be some clerical mistake which might be involved. So for that reason, what they have specified is that in case of differences between 1 and 3B like this, officer will directly not start recovery proceedings, but he will issue a notice specifying the registered person to respond within a specified time. And in any case, if the registered person fails to respond or fails to pay the amount or fails to give a clarification or explanation, then the officer will start recovery proceedings under section 79. Very interesting, fantastic amendment in simple terms, where they specified that self-assessed tax shall include the tax which is specified in GSTR 1 but not specified in GSTR 3B. A very brilliant and fantastic amendment. Friends, we just discussed that in case of any pending proceedings under section 62, 63, 64, 67, 73 or 74, then commissioner can initiate action of provisional attachment. See, the whole idea of this provisional attachment is only to safeguard the interest of the revenue. By any chance, if there is some amount which government has to get from the registered person and government is of the opinion that it is necessary in the interest of revenue to do a provisional attachment, then commissioner may order for provisional attachment of any property including bank account. In this context, let me tell you, my dear friends, couple of interesting amendments have come up. Point number 1. Earlier, they have specifically specified that after initiation of proceedings under section 62, 63, 64, 67, 73, 74. That is what specific section numbers is what they have given earlier. But now the interesting amendment which has come up is something like this, my dear friends, that if after initiation of proceedings under chapter 12 or 14 or 15 of CGST Act, commissioner is of the opinion that it is necessary in the interest of revenue to order for provisional attachment of any property including bank account, then he can order for provisional attachment. Now what is this chapter 12, 14, 15? Chapter 12 deals with assessments and chapter 14 deals with inspection, search, seizure and arrest, and chapter 15 deals with the concept of demands and recovery. Now what they have done is, earlier they specified specific sections of 62, 63, 64, 67 and all. But now what they have done, they have specified that if after initiation of any proceedings under section 62, 63, 64, 67, 73, 74, that words they replaced by chapter 12, chapter 14 and chapter 15. So if after initiation of proceeding under chapter 12, 14, 15, commissioner is of the opinion that it is necessary in the interest of the revenue to safeguard the interest of revenue, he may order for provisional attachment. Chapter 12 deals with assessment, 14 deals with inspection, search, seizure and arrest, and 15 deals with demands and recovery. 1-2 more interesting amendments which have come up in this section 83, my dear friends. That is, next interesting amendment is that we just discussed that objections to the attachment can be filed within 7 days. But now they removed that concept of 7 days and they specified that objections can be filed at any time. So they removed that restriction of 7 days, that objections to be filed within 7 days has now been removed. So now objections can be filed at any time. Now one more interesting point to be noted here. So imagine a case like this. There is one person, Mr. A, who has issued invoice to Mr. B without actual supply of goods or service. That means A has given invoice to B and there is no supply of goods or services. That means invoice is issued without actual supply by Mr. A to Mr. B. Now the point is very simple, that earlier the action of provisional attachment was taken only on the person Mr. A who has issued invoice without actual supply. But now they have specified and brought one more interesting amendment in the law where they have specified that provisional attachment could be done of the property belonging to that person also at whose instance the transaction was conducted. That means this transaction was actually conducted by A to B so that A will pass on the credit to B and B will enjoy the credit even without actual receipt of goods or services. That means there is an invoice without supply of goods or services and B has enjoyed the benefit of input tax credit. So law specified that provisional attachment could be done even of the property belonging to Mr. B also. So provisional attachment of the property could be done on the actual person or on the person at whose instance the transaction was conducted. Otherwise, the person who has derived benefit out of such transaction, his property also could be attached. And once this provisional attachment is done, a copy of the order of provisional attachment shall be sent to that person whose property is provisionally attached. So by doing all these amendments in section 83, the scope and the powers of the commissioner have been widened. Friends, one very interesting amendment has come up in this section 109, and this amendment is a consequence of the amendment which has come up in section 129. Section 129 of the penalties topic deals with the concept of detention and seizure. 130 deals with confiscation, whereas detention and seizure concept is dealt by section 129. And there is an interesting amendment which has come up in section 129 in case of detention and seizure, wherein the penalty provisions have been completely changed. Earlier the penalty was basically wherever the conveyance or the goods have been stopped in transit, the person was required to pay the tax amount as well as the penalty amount. Both was required to be paid for the purpose of release of the conveyance in transit. But wherein the penalty provisions have been completely changed, where they have specified that under section 129, the person is just required to pay the penalty amount for release of the goods and conveyance in transit which are improperly being removed. In case where invoice is missing or waybill is missing or the documents are not proper or the goods are not proper, in that case the goods and the conveyance which have been detained in transit is released only in case of payment of penalty. And since that amendment has come up, what they have specified is that in case where any appeal is being filed against order passed under section 129, then the pre-deposit concept is completely changed. Generally, what is a pre-deposit? Generally, the answer for pre-deposit is 100% of admitted dues plus 10% of remaining amount of tax in dispute subject to maximum 25 crores under CGST Act, 25 crores under SGST Act, so maximum 50 crores. Now, the interesting amendment which has come up is that in case where appeal is being filed against order passed under section 129 related to detention and seizure of the goods and conveyance in transit, then the pre-deposit that is required to be paid is 25% of the penalty amount. So generally the pre-deposit is what? 100% of admitted dues plus 10% of remaining amount of tax in dispute. But in case of appeal filed against order under section 129 related to detention and seizure of goods and conveyance in transit, the pre-deposit amount shall be 25% of the penalty. This is a small interesting amendment which has been inserted as a proviso to section 107 subsection 6. Section 150, what we just discussed, deals with the concept of information return. Now next section, my dear friends, section 151. This section has actually given power to the commissioner or any other officer authorized by the commissioner. He can collect any information from any registered person or from any person in relation to any purpose related to the act. So maybe something like might be collection of statistics, collection of information, collection of data. So they basically has given power to the commissioner or any officer authorized by the commissioner under section 151. They have been given power. Who has been given power? Commissioner or any other officer authorized by the commissioner. They have been given power to collect any information in connection with this act, and this information should be furnished by such person within the prescribed time or prescribed form and within the prescribed manner. So they basically kept this point so open that commissioner can collect information from any concerned person if it is relevant for the purpose of GST. Next section in this topic of miscellaneous provisions, my dear friends, that is section 152. Pretty wonderful and fantastic section. That is, imagine, my dear friends, commissioner has given notice to one person, Mr. X, and collected some information from X which commissioner wants to use for the purpose of activity related to GST, or maybe that similar information, similar industry data obtained from Mr. X, he wants to use it against another registered person. In that case, my dear friends, commissioner or the person who collected that information is under an obligation, and he has to ensure that he should not disclose that data in such a manner that it will specify that it pertains to Mr. X. And moreover, the data cannot be disclosed unless the person is being given an opportunity of being heard. That means, in simple terms, whatever data or information is obtained under section 150 or section 151 cannot be disclosed in such a manner that it communicates that this data is concerned to a particular person. And moreover, on the person concerned, if action is being taken up, then such action cannot be taken unless the person is being given an opportunity of being heard. So finally, 150 deals with information return, 151 deals with power of commissioner to collect the information and data, 152 deals with bar on disclosure of information. That is something like that data which has been collected cannot be disclosed to any person in such manner that it clearly indicates that this data belongs to a particular person, and no action can be taken using that information unless the person is being given an opportunity of being heard. So the concerned person or person concerned should be given an opportunity of being heard, and only then that data can be used for the purpose of taking any action or proceedings. One last interesting point in this anti-profiteering measure before I complete, my dear friends, that is a small interesting amendment which has come up, and of course very logical also. That is, this National Anti-Profiteering Authority which has been constituted by the central government, the fundamental activity of this authority is to ensure that whatever reduction in the rate of GST or any exemption in GST which has come up, the benefit has to be passed on to the end consumer by way of reduction in prices. That is what this anti-profiteering authority, the whole agenda and the whole motto is to check that any benefit in GST has to be passed on to the end consumer. But the interesting point is, this National Anti-Profiteering Authority was constituted on 1st of December 2017, and the tenure of the authority was actually 4 years, which got completed on 30th of November 2021. So they made an amendment in the rule where they have specified that the tenure of the authority, that is National Anti-Profiteering Authority, is increased to 5 years from the existing 4 years. So technically, this National Anti-Profiteering Authority will continue to be in existence. That means the tenure is still continued up to 30th of November 2022. So the tenure was actually completed on 30th November 2021, but they extended this tenure from existing 4 years to 5 years. So technically this Anti-Profiteering Authority tenure is up to 30th of November 2022. So friends, section 129 deals with the concept of detention or seizure of the conveyance and goods in transit. And we discussed very clearly for what reason the goods are detained or seized. Practical example is very clear where goods are being transported without an invoice, or goods are being transported without e-way bill, or the goods which are mentioned in the invoice and the goods which are physically present, both are different. So in all these different circumstances, there could be a case where the goods are detained or seized. And what is detention, seizure? I clearly discussed that with you, my dear friends. What is detention? Detention is nothing but a legal notice being served, and seizure is nothing but taking physical possession of that goods. Now in case of detention or seizure of the goods and conveyance in transit, my dear friends, penalty provisions are prescribed under section 129. And that too, an interesting point to be noted is penalty provision is different in case where owner comes forward, owner does not come forward. Now what is the meaning of this word owner comes forward? That means the owner of that goods has accepted, yes sir, I made a mistake, I'll come forward for the purpose of payment of penalty. In that case, the penalty amount is different. And the owner does not come forward, the penalty amount is altogether different. So my dear friends, let me explain here very clearly what is the penalty provisions prescribed in the law, where they have specified that if the owner comes forward, then the penalty provision given in the law is 200% of the tax payable. Now what does that mean? Let's take an example. Value of the goods is 10 lakhs, GST is 18%, which is nothing but 1,80,000. And the penalty will be 200% of 1,80,000, which works out to 3,60,000. That is the penalty that is required to be paid if the owner comes forward. And by any chance, if the goods are exempted goods, then the penalty will be 2% of the value of the goods or 25,000, whichever is lower. So if the goods are taxable goods, penalty is 200% of the tax payable. And if the goods are exempted goods, penalty will be 2% of the value of the goods or 25,000, whichever is lower. And the other side, if the owner does not come forward, here penalty is much more, my dear friends. If the owner does not come forward, then the penalty shall be 50% of the value of the goods or 200% of the tax payable, whichever is higher, not lower, whichever is higher. So let's continue that same example. Assume value of the goods is 10 lakhs, rate of GST is 18%, which is nothing but 1,80,000. 200% of 1,80,000 is 3,60,000, and 50% of value of the goods is 5 lakhs. So penalty will be 5 lakhs or 3,60,000, whichever is higher, which is nothing but 5 lakhs. So if the owner comes forward, penalty is 200% of the tax, and if the owner does not come forward, penalty will be 200% of the tax or 50% of the value of the goods, whichever is higher. And in case where owner does not come forward and the goods are exempted goods, then the penalty will be 5% of value of the goods or 25,000, whichever is lower. So in case of exempted goods, owner comes forward, 2% of value or 25,000, whichever is lower. And if owner does not come forward, 5% of the value of the goods or 25,000, whichever is lower. So this is a very interesting penalties provisions which have been prescribed in section 129, which are very stringent. And let me tell you, once upon a time, goods were released on provisional basis upon execution of bond and furnishing of security. But now that provision has been removed from the law. So now goods are not even released on provisional basis. Once officer does detention and seizure, the goods will be in the control of the officer, and the proper officer is required to issue a notice within 7 days from the date of detention and seizure, and within 7 days from issuance of notice, he will be required to pass an order. So technically 7 days time limit is prescribed for each activity. So for notice it is 7 days, for order it is 7 days. So within 7 days of detention and seizure, officer will issue a notice, and within 7 days from issuance of notice, officer will pass an order. So within 7 days from detention of seizure, proper officer will issue a notice specifying the amount of penalty payable, and within 7 days from the date of service of notice, PO will pass an order specifying the amount payable. When I say amount, we are talking about the penalty payable. And let me tell you an interesting point, my dear friends. That is, if the penalty specified in the order is not paid within 15 days, then the goods shall be subject to disposal. That means the goods which have been detained or seized shall be sold by way of conducting an auction to recover the amount of penalty. And here the interesting point to be noted is the set 15 days time limit could be further reduced in case where the goods are hazardous in nature or perishable in nature, or those goods where value is reduced by passage of time. Then PO may reduce the time limit of 15 days also. So if the penalty is not paid within 15 days from the date of service of order, then the goods or conveyance which have been detained or seized shall be liable to be sold or disposed. And that set period of 15 days could be reduced in case where the goods are perishable in nature or hazardous in nature, or where the value of the goods is reduced by passage of time. Further, my dear friends, we are talking about detention or seizure of goods and conveyance in transit. So we are talking about detention or seizure of the conveyance also, that is a vehicle also. So my dear friends, there is a possibility that this vehicle belongs to the transporter. Then transporter also can get the conveyance released only upon payment of penalty specified, that is what we discussed, or 1 lakh, whichever is lower. So transporter will be required to pay that penalty in order to ensure that he will get that conveyance released. So penalty provision specified in 129 or 1 lakh, whichever is lower. Always, my dear friends, keep in mind that this penalty payable by the person is determined only after the person is being given an opportunity of being heard. Generally, that is known as principles of natural justice, where a person is being given an opportunity of being heard, and only then the proper officer will decide what is the amount of penalty payable. Finally, one last point let me discuss in relation to section 129, my dear friends. That is something like this. We just discussed that in case where the person does not come forward and person does not pay the penalty specified in the order within 15 days from the date of service of order, then the officer shall proceed to sale or disposal of the goods or conveyance so detained or seized. In case, my dear friends, the goods or conveyance which are detained or seized are sold, then whatever amount is being recovered upon sale of such detained or seized goods, how he will apportion that is basically, first, the amount spent or amount incurred for the purpose of administrative cost of the recovery process, it is apportioned towards that. Next amount is apportioned towards the amount of penalty payable or the amount due under the act. And next it is apportioned towards any other amount due under CGST Act, SGST Act, IGST Act or UTGST Act or any other rules thereunder. And if still any balance amount is left, then my dear friends, that amount shall be credited to the electronic cash ledger of the person if the person is a registered person. And if the person is an unregistered person, then that amount will be transferred to the bank account of the concerned person. And by any chance, if the person is not traceable or for any reason within 6 months, if the amount could not be transferred or further period as PO may allow, then the balance amount shall be transferred to the fund. When I say fund, we are talking about consumer welfare fund. So for example, if the goods are sold and 10 lakhs is recovered, first out of that 10 lakhs, assume 1 lakh is the administrative cost of recovery process, that is kept aside. And there is some penalty due of 3 lakhs, that is kept aside. Balance is 6 lakhs. Out of that 6 lakhs, there is some old dues of 2.5 lakhs, that is also adjusted. And the balance left is 3.5 lakhs. That 3.5 lakhs shall be credited to the electronic cash ledger if the person is a registered person. And if person is not a registered person, it will be credited to the bank account of the concerned person. And if it is not possible to give that 3.5 lakhs to the concerned person within 6 months from the date of sale or further period as PO may allow, then in such case, my dear friends, that amount shall be transferred to the fund. That is nothing but consumer welfare fund. This is an interesting story of this beautiful and fantastic section known as section 129. My dear friends, this table basically talks about what is the maximum fine that can be imposed under section 130, which deals with the concept of confiscation. But however, my dear friends, they have specified in a proviso in section 130 where they have clearly specified that the aggregate amount of fine and the penalty shall not be less than the penalty equal to 100% of tax payable on such goods. Once upon a time, they have specified that shall not be less than penalty under section 129. The reason for that was penalty under 129 earlier was 100% of tax, but now they change it to 200% of tax. For that reason, they have specified under section 130 that the aggregate of fine and penalty shall not be less than the penalty equal to 100% of tax payable on such goods. Now, my dear friends, in this rule 3, which deals with the concept of definitions, 2-3 interesting more definitions have been added by virtue of recent amendments. One such interesting amendment is the definition of the word common portal. Now, what is this word common portal? Like how we have got a GST common portal www.gst.gov.in, they have developed one common portal for the purpose of customs also, which is technically ICEGate, www.icegate.gov.in. In fact, ICEGate stands for Indian Customs Electronic Data Interchange Gateway. So if we strictly look at the definition says common portal means the common customs electronic portal as referred to in section 154C of the Act. And the CBIC has notified ICEGate as the common customs electronic portal. So the common customs electronic portal is ICEGate, www.icegate.gov.in. And as I specified, ICEGate stands for Indian Customs Electronic Data Interchange Gateway. Next definition, my dear friends, defines the concept known as what is customs automated system. Now, what is customs automated system? It basically means the Indian Customs Electronic Data Interchange System. So basically, they tried to develop a common portal wherein the data exchange and interchange can be happened across various authorities with the customs department. Finally, one more last interesting definition which got inserted in rule 3, my dear friends, that is what is the meaning of the word date of import. Technical answer is very clear. Date of import means the date on which order is made by the officer under section 47 for the purpose of clearance of such goods. Already we discussed this concept in the case of import-export procedure. Basically, it is nothing but date of import is the date on which order is made by the proper officer under section 47 for the purpose of clearance of such goods. So friends, we are done with the concept of rule 3 which deals with definition. Now let's move forward to discussion about rule 4, my dear friends. And rule 4 deals with the concept of importer to give information to the officer. And basically, when I say officer, some interesting concept has come up which has been recently amended, which is very, very interesting. Now let's discuss what is the amended concept. Listen very clearly, sir. So we have taken an example that there is one person, Mr. Anand, who is engaged in manufacture of some goods or is engaged in providing some output service. And this particular person, Anand, is importing some goods, and on that goods, he wants to get a benefit of exemption and pay the duty at concessional rate because he is going to use that goods for that specific purpose mentioned in the notification. Now, in that case, my dear friends, this particular importer is required to submit one-time information on the common portal with respect to what is that manufacturing activity is carrying out, what are the goods which are being imported, what kind of service is being providing, all the details he is required to submit on the common portal. And once the details are submitted, one interesting number is generated, that is import of goods at concessional rate identification number. It's called IIN. Import of goods at concessional rate identification number, IIN, is generated on the common portal. And whenever there is an amendment in the details what have been submitted, that can be amended at any point of time. That facility is being given. And moreover, my dear friends, this particular importer who is importing goods at concessional rate of duty by availing the benefit of exemption notification, he is required to execute one bond, which is technically known as a continuity bond. with such security or surety as the officer may specify. And the whole purpose of this continuity bond is that by any chance tomorrow, if the officer identifies that this particular person has enjoyed the exemption even though he is not eligible, then the officer will exercise that bond and recover that amount of duty payable along with the interest from the date of import till the date the duty has been actually paid. And of course, imagine a case like duty is 20%, but this man enjoyed exemption and paid 10%. Now for the balance 10% only, he'll be required to pay the interest component. Now my dear friends, let's look at once again what are all the details that are required to be submitted on the common portal. See that, come on. Number 1, name and address of the importer and his job worker if any. Job worker also possible where manufacturer is sending some goods to the job worker and getting manufactured done through job worker. So what is the first point? Name and address of the importer and his job worker if any. Second point, the goods produced or process undertaken at the manufacturing facility of the importer or his job worker if any, or both. Third point, nature and description of the goods imported used in the manufacture of goods at the premises of the importer or the job worker if any. Fourth point is very interesting. Particulars of the exemption notification applicable on such import. Fifth point, nature of output service rendered, utilized using the goods imported. And finally, intended port of import. What is the port at which you intend to import these goods on which you want to claim the benefit of exemption notification. So all these details is required to be submitted. So basically Rule 4 talks about the responsibility of the importer to give prior information on the common portal through which one number is generated, that is import of goods at concessional rate of duty identification number, which is known as IIN. That number is generated on the common portal once all these details are submitted and validated. So basically the whole idea of Rule 4 is to ensure that importer is required to give prior information, and that too the information has to be given on the common portal through which once the data is validated, the number known as IIN, import of goods at concessional rate identification number, is generated on the common portal and the data can be updated at any point of time. And it is important to be noted that importer is required to submit a continuity bond with such surety or security as the jurisdictional deputy commissioner or assistant commissioner of customs may specify. Friends, we are done with discussion on Rule 4, which deals with the concept of importer responsibility to give prior information. Now let's move forward and talk about Rule 5. What is the procedure to be followed in order to enjoy this benefit of concessional rate of duty? Now what is the procedure to be followed? Now this particular importer who is importing some goods and going to use them for the purpose of providing output service or for the purpose of manufacture of some goods as mentioned in the exemption notification, in that case my dear friends, whenever he makes an import, at the time of making an import and at the time of submitting bill of entry, he is required to submit IIN, which is nothing but import of goods at concessional rate of duty identification number. So he is required to submit IIN and also continuity bond number at the time of making an import. In the bill of entry, he is required to mention that, so that the assistant or deputy commissioner of customs who is present at the port of import will take that number into account and grant the benefit of exemption notification. And by any chance, if subsequently the goods are cleared for home consumption, in that case, whatever continuity bond is submitted by the importer, that gets debited automatically by the customs automated system and the details shall be made available at the common portal. The whole idea of this process is only to ensure that government is trying their best to ensure that manual process is being removed and everything gets automated and entire process works electronically through an automated system. That is the reason why they developed this customs automated system and the common portal. So at the time of filing bill of entry, importer is required to submit IIN and the number of the continuity bond so that he can enjoy the benefit of exemption notification. So this is the procedure to be followed, which is specified as per Rule 5. Now my dear friends, let's talk about Rule 6. What is Rule 4 talking about? Rule 4 talking about importer to give prior information. and rule 5 talks about the procedure to be followed. Now let's look at the rule 6, my dear friends, which deals with the concept of maintenance of records, or the records are data that is required to be maintained by the importer who is enjoying the benefit of concessional rate of duty under exemption notification. He is required to maintain certain details and maintain specific records and register, and he will be required to submit that information to the assistant or deputy commissioner as and when required by them. So whenever AC or DC asks the information, he should be in a position to immediately submit the records and statements. And by any chance, if there is a non-receipt or short receipt of goods at his premises, he must update that specifically very clearly on the common portal immediately itself. And moreover, my dear friends, this particular importer who is enjoying the benefit of this concessional rate of duty subject to the conditions specified in exemption notification, he is required to submit monthly statement every month by the 10th of next month. For example, for the month of August, it is to be submitted by 10th of September. For September, it is to be submitted by 10th of October. So in such manner, data is required to be submitted. And what is that relevant records this importer has to maintain? Let's have a look at it. See now. Importer shall maintain an account in such manner to clearly indicate the quantity and the value of the goods imported and the date of receipt of goods imported in the relevant premises, then quantity of such goods consumed, quantity of the goods sent to job worker, nature of job work carried out, and the quantity of goods received after the job work, then quantity of goods exported under rule 7, which we will talk, and the quantity remaining in stock according to the bills of entry. That means in simple terms, what is the quantity that is imported, what is the quantity that is brought to the premises, what is the quantity sent to the job worker, what is the quantity returned from the job worker, and what is the quantity which is exported, and what is the quantity of the goods which is remaining as per the bill of entry. So this basically information has to be maintained, records have to be maintained, and they will be required to be submitted as and when DC or AC may call for that information. This point is given by rule 6. Next, my dear friends, let's talk about the concept of rule 6A and rule 6B. 6A talks about sending of these goods for the purpose of job work. So basically, procedure for allowing transfer of goods for job work. The which goods? Imported goods. 6B talks about procedure for transfer of goods to another unit. So basically, there could be a case where Anand has got unit in one place and another unit in another place. So from one unit, he is transferring goods to another unit. Then rule 6B will come into picture. And in case where goods are being sent for the purpose of job work, then 6A will come into picture. Now in both the cases 6A and 6B, the importer who has imported the goods and is enjoying the benefit of concessional rate of duty is required to maintain the proper information and proper data related to such goods, because if anything goes wrong, he will be subjected to penalty. And moreover, the interesting point to be noted is that the goods which have been sent to job worker or the goods which have been transferred to inter-unit have to be mentioned very clearly in the monthly statement filed by the importer by 10th of next month, which we already discussed. In that, he will be required to mention that details. And let's see one interesting point as to what is the responsibility of the job worker. See now, the job worker shall maintain an account of the receipt of the goods, manufacturing process undertaken thereon, and the waste generated, if any, during such process. And the job worker shall produce the account details before the jurisdictional customs officer as and when required by the said officer. And the job worker, after completion of job work, send the processed goods to the importer or to another job worker as directed by the importer for carrying out the remaining process, if any, under the cover of an invoice or an e-way bill. And we all know the concept of e-way bill, which we already discussed at a stretch in detail in GST. Clear, my dear friends? So under cover of an invoice, the goods are being transported from the premises of the person who has imported the goods to the premises of the job worker. So for to job worker transfer, rule 6A will apply. And if the goods are transferred to inter-unit, rule 6B will come into picture. This is the story of rule 6A and rule 6B. Come on, my dear friends. We are done with discussion up to rule 6. We just have got two more rules to talk about rule 7 and rule 8. then we can complete this beautiful topic of customs import of goods at concessional rate of duty rules. Come on, my dear friends, let me talk about an interesting concept of Rule 7. Now, what is this Rule 7? Listen very clearly, listen very carefully. So, let's say, for example, there is one person, Mr. Anand, who is manufacturer of chairs in India. And for the purpose of manufacture of chairs in India, he imported some raw materials from the foreign country. And that raw materials are covered under the benefit of exemption notification subject to satisfying some prescribed condition. Now, Anand decided to enjoy the benefit of exemption notification and he submitted that at the time of filing bill of entry and he applied all the details and he got that IN, all the procedure he has followed. Now, the point here is he imported, let's say, 1000 quantity. Out of the 1000 quantity, 950 quantity was utilized for the specified stated purpose, but the 50 quantity is left out as unutilized. Or it could be a case where the 50 quantity is defective. So the point to be noted here is that 50 quantity became unutilized or a defective. Now, one biggest point to be noted in the law is that in the rules they have clearly specified that the importer who is enjoying the benefit of exemption notification must use the goods for specified purpose within 6 months from the date of import. And within 6 months, if there is some unutilized or defective goods, importer has got two options. Option number 1, he can re-export. Option number 2, clear that unutilized or defective goods for the purpose of home consumption. Now, if he is re-exporting, there is no requirement to pay the duty, but the re-export price should be higher than the value at which the goods have been imported. So, the re-export price cannot be lower than import price. And other side, when I talk about clearance for home consumption, he can clear for home consumption subject to payment of duty along with interest. But of course, the interesting point to be noted here is that whether he is re-exporting or is clearing for home consumption, the important point to be noted here is that the details of the goods which have been re-exported or cleared for home consumption must be specified in the monthly statement to be filed by the importer in the prescribed form. That is very important. But now, imagine a special case like this. Anand, who is a manufacturer of chairs, has imported a machine from the foreign country for the purpose of manufacture of chairs. That machine is nothing but a capital good. Imagine he want to clear that capital good for the purpose of home consumption. Then law is telling pay the duty now, but don't pay full duty, but please pay the duty something like this. That is the actual duty what would have been paid at the time of import minus some depreciation percentage will give, where they specified that for the first year 4% per quarter, second year 3% per quarter, third year again 3% per quarter, fourth and fifth year it is 2.5% per quarter, and thereafter it will be 2% per quarter. This way they have specified how do we reduce the percentages as depreciation from the duty that should have been paid, and the balance amount now you please pay along with interest, because you are clearing that for home consumption. This is an interesting concept given by Rule 7, my dear friends, which talks about clearance of unutilized or defective goods. So, in case if the machine that is imported is being used for the purpose specified in the exemption notification, that is for manufacture of the chairs, and after that purpose specified in the exemption notification is done, my dear friends, let me tell you, such capital good can be cleared for home consumption subject to payment of duty along with interest. But of course, law is telling need not pay the duty on the entire actual value, but please pay the duty only on the depreciated value. And how do we calculate this depreciated value and how do we charge the depreciation? The depreciation that you would have supposed to be paid at the time of import, that will be reduced by 4% per quarter for first year, 3% per quarter for second year, and again 3% per quarter for third year, and fourth and fifth year it is 2.5% per quarter, and subsequently it is 2% per quarter. So these are the very interesting points given under Rule 7, my dear friends, which deals with the concept of clearance of unutilized or defective goods which could be cleared for home consumption or it could be re-exported. And in case of capital goods, we very clearly discuss special concept of the depreciation which is taken into account. And of course, please note, my dear friends, this depreciation percentage will start calculating from the date when the goods have been put to use, the capital goods have been used for the purpose mentioned in the exemption notification. And all these details of clearance, payment of duty, all this is to be mentioned in the monthly statement that is filed by the importer. Finally, my dear friends, let me talk about the last interesting rule, that is Rule 8, which talks about recovery of duty. This point clearly specifies that in case where the importer who has enjoyed the benefit of exemption notification and has paid concessional rate of duty or no duty at all, whatever case it is, in that case, my dear friends, in case where there is a failure to satisfy any prescribed condition in the exemption notification or there is a failure to make payment of the duty, in that case, my dear friends, the assistant commissioner or the deputy commissioner of customs who has got jurisdiction over that importer will take an action against the person for the purpose of recovery of duty. So basically, he will invoke the bond and start the recovery proceedings for the difference of amount of duty or the duty amount which he has claimed as exemption, and that amount shall be recovered along with interest from the date of import till the date of payment. This is the concept given by Rule 8, which talks about recovery of duty. That said, this is the story of this beautiful concept of customs concessional rate of duty rules. Something very critical, very interesting. In order to enjoy the benefit of an exemption notification, he is required to satisfy all the conditions and follow the prescribed procedure. And where there is a violation, the duty will be recovered along with interest. One more interesting special point I want to discuss in relation to the concept of payment of duty, my dear friends. That is, similar to the concept of GST, they have introduced the concept of electronic cash ledger under customs also, through which whenever importer is required to pay any duty along with interest or penalty, whatever it is, he can pay that duty using electronic cash ledger. However, there are certain specified deposits which have been exempted from payment using cash ledger, and CBIC, that is Central Board of Indirect Taxes on Customs, have specified what are those cases which have been exempted from cash ledger. Let's see that now. See, CBIC has specified certain deposits which are exempted from provisions of payment through cash ledger. Number 1, with respect to goods imported or exported in customs station where customs automated system is not in place. If the customs automated system is not in place, how can we make the payment electronically and show the proof of that electronic cash ledger? Second point, with respect to accompanied baggage, even in that case also there is no requirement to pay using electronic cash ledger. Third, other than those used for making payment of any duty of customs, including cess and surcharge levied as duty of customs, IGST, GST, compensation, cess, interest, penalty, fees, or any other amount payable under the said Act or the Customs Tariff Act. Other than those used for making payment of this, then they are exempted from using the provisions of electronic cash ledger. A small interesting concept which has come up by virtue of notification number 19 by 2022 dated 30th March 2022. A simple concept is those cases which have been exempted from following the provisions of electronic cash ledger. But in general, whenever there is a requirement to pay the duty, interest and penalty, importer or exporter is required to pay using electronic cash ledger, similar to the concept of GST. FTP 2015 to 2020, which was technically supposed to complete on 31st March 2020, got extended for multiple dates because of various reasons of COVID, which we all know, which was supposed to end by 31st March 22, and now it is further extended till 30th September 2022. So applicability of FTP 2015 to 2020 is still extended to up to 30th September 2022. Next interesting point, my dear friends, that is in case of advance authorization or EPCG license, or in case of imports made by EOU, EHTP, BTP or STP units, the exemption from payment of IGST and GST compensation cess was there till 31st March 2022. Now the set period has been further extended up to 30th June 2022. So basically the amendment in the law is not being done, but the law which is being existing is further being extended. That is an interesting amendment which has come up, that exemption from IGST and compensation cess in case of advance authorization or EPCG authorization or EOU, EHTP, BTP, STP units is extended from 31st March 22 to 30th June 2022.